Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube? Hope you're all doing okay. Apologize for the recent technical issues, and I hope we'll get through this today without any interruptions. I'm streaming from Costa Rica, and I've been having substantial hardware problems here, and I've been working on them. And maybe, as they say, we'll sneak under the wire today. And if I do happen to crash, I may not be able to get back in. But if we're fortunate, you'll be able to come back. I should say I might be able to come back into Discord, but it's always a question. So why don't we get going? We have a lot to talk about. Also, I hope you guys took advantage of the special Pro Trader series that it completed this week. I will flash that over to you so you can kind of see who was there, and be sure to review them on YouTube as well as this stream and other streams that have been done from the perspective of auction market theory, using a volume profile as a chassis and integrating Bookmap Orderflow tools, if you might say, as the tip of the spear where the financial rubber meets the road. This is about the business of trading. It's about creating sustainability. Trading is very much a business of statistical probabilities, not predictability, not how you feel, and it's certainly not a video game. Some individuals gravitate towards trading because of the dopamine fix and the excitement. It's really entertainment. It just saves you the trip to the casino. But when you go to casino, at least you get the cocktails and the ticket to the buffet. Here, you may not have a realistic approach to what you're actually doing. And if you're gambling, it's no different than going to a casino. Maybe you'll get lucky, but it's not sustainable. And there is something called Gamblers Anonymous. You've heard of that. Well, trading can have the same impact on you and the same responses. The thing is to differentiate and choose which side of the table you want to sit on. Do you want to sit with the gamblers, or do you want to sit with the house? And the house only plays games that have a statistical edge, even though they pay the gamblers. This is the difference. And if you don't know the difference, or you are the gambler, in spite of random winnings, because every gambler has winning hands, you might want to step back, evaluate what you're doing, and deciding if what you're doing currently is sustainable, or if maybe you might need a different approach and a different understanding of what you believe the business is. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get there, we always talk. The other thing I want to mention, if you're visiting in YouTube, thank you so much for being here. I am very limited today. I am not running extra monitors, which I typically do when I'm traveling. I only have one screen. So I am not going to be able to review questions in YouTube, but if you have something you want to post, feel free to use the link in the bottom of YouTube. Visit the Trader Lab community. There is no cost for it. You won't be solicited or otherwise abused. It's a great community of like-minded traders who've come together to leverage their collective experience. It doesn't matter how long you've been trading, what you do, how you do it. What does matter is that you're serious, and that you're serious about the business. I can assure you, Trader Lab's not romper room. It's really serious business. So if you're interested in the business and sustainability, Trader Lab might help you towards that objective. The other thing is, if you are in the Bookmap Discord Trader Lab community, I will be monitoring that through my phone, so I can actually read your questions. So while you're right now during the stream, try not to post anything that is not really specific to what's happening right now in the market or questions, and I'll do my best. And again, apologies for technical issues, but I was very close to jumping on a plane here from Costa Rica and getting back to the States to drop this laptop off for repair and buy a new one. And that's not out of the question. So that might still be something I'll do. So if you're in Miami, save a spot for me. This is the Pro Trader webinar that just finished today. If you haven't watched them, you might find some value in some of this. Like everything, everybody slices and dices the pie differently. You have to find what you can relate to, and by all means, you must vet everything. How many times do we see cherry-picked ideas or the only one thing you need? Now, I'm not suggesting that's a situation here. I'm suggesting it's generic to all ideas, whether it's TraderLab or anywhere else. You have to find if it actually has a statistical edge and if you can relate to it. So sometimes, the best ideas are just another random outcome. And we all have winning trades. So it's not about a winning trade. It's about sustainability and statistical probabilities. Hope that makes sense. Now, let's try to get to Bookmap. And again, please remember, I'm in an unstable situation here with the computer and the technology. If I drop out, I might not be able to come back. So I just want you to know I appreciate you all coming to TraderLab today. So now what's important about today, which was really good, there was some news that came out, and Doug posted this, DM Trader, posted this in the morning, and I didn't see it in my news feed because I can't watch my news feed on one monitor. But something about drones and France shooting down a drone or something. But it looked like a news event to me when we got this sell-off in the ETH. Now, what's interesting about the sell-off, first of all, I didn't know what was going on. I have to tell you that because I'm kind of, in Costa Rica and with serious technical issues. Normally, I run 3 monitors down here, and now I'm just on a laptop, so it's a little different. But when this news came, look at this. I call this the Acapulco cliff dive. Now, the other thing to know is, at the time, we were over yesterday's RTH high. The overnight volume point of control was here. That's the retail price. So it looked like go north, young market, go north. But then when you get news, what happens when news happens? Well, actually, it's a disruptor. And depending on the news input, and think about it, you get a news flash that there was some kind of military event. What happens? Well, the algos read the news, and either everybody runs for the exit, and that is what you see. Long liquidation stops getting hit. One moment. And potential excess. Now, we never know what will happen. We only know what might happen. So that's why you always have to use protective stops and understand you're in an environment of you need to know you don't know. So let's consider this. So we get the sell-off news, and at this point, I'm looking at this, but here's what I know. This is yesterday's value area. Value area is where the fair accepted price is. It's called value. Value is a fair area. 70% of the volume yesterday took place in here. Also, yesterday's naked volume point of control, or highest volume, think shopping, was here. So when we're coming down, I'm looking at this and I'm going, well, what is going on? Well, if I get into value, then I have to be very careful. This could be a failure or something going on. But I have 2 levels. I have a level here at the retail price, and I have value area. So this is very important. Do I get under here? Now, when I looked at this, and I was thinking, well, this could be a long, and that failed because we had a liquidity trigger and a buyer, and then the sellers took over again. Okay, not ripe. Then I came down here, and I saw this. This is yesterday's mid. And it turns out this is the ETH low. Who knew? But let's look at the change in behavior. And it's important because this sets up what might happen in the RTH. You have to take everything into consideration. Let's think about how you can stack these things together. You have the higher time frame, the general drift of the RTH, which is up. You have yesterday's auction, which was leaning to the north side. The highest volume was at the high end of value, which suggests an upward pressure. Yesterday's settlement was here, and yesterday's high is up here. Probabilities are, if this is the high end, that we are going to take out and test yesterday's high. We also have the overnight volume point of control, similar to this, but this is the ETH retail price. Then we have the ETH high. And what else? stops here, and another target up around 10. So that's the lay of the land. Now, I'm not going to show you the higher time frame at the moment because I don't want to press my luck. So let's continue. And remember, if you're in YouTube, thanks for visiting. I cannot see your questions because of a technical issue here. I hope that you're getting some value. Use the link in the bottom of YouTube if you want to visit Trader Lab, and I'd be able to answer your questions there. Okay. If you have questions, post them there in Discord. Okay. So this setup along in the ETH, and here's what might set it up, might being the operative thing. Value area low, a news-based event, and a news-based event is a disruptor. It causes a disruption to what the perception of valuation is until it's processed. That means it's almost like, what was that? Oh, okay. Not that doesn't mean that much. Okay. Then why does the market go down? Because the market's long. It was long in the ETH, and it's basically long from yesterday. So if the market's long, what does the market do? The market goes up to go down. Well, the market went up, the market went down. Now, when the market goes down, we get shorts in here who can become buyers. So if we run out of sellers, the sellers become the buyers. So it's market goes up to go down, market goes down to go up. So now from where? Part of the thrill. Now, if this is not your trade, it's not. Now, I know some traders in Trader Lab took this long. Now, it doesn't mean you should take it. It just means they did. And like every trade, the outcome is what? Random. So if you put a trade on over wherever it was, I think I pointed it out over here someplace, you take a stop, you put it on again. Actually, it was right there. And if it sets up again, you get a trigger, you put it on again. Were you going to take a stop? Yeah, maybe. Don't want to take a stop? Then you can't trade. Nobody wants to take a stop, but the house in the casinos pays the gamblers. It's overhead and cost of production. It's not a right or wrong. Very hard for us to experience it for what it is versus how we feel and what our primary, you might say, our wiring is all about. Approval, self-esteem, all this kind of stuff, validation. So you need to learn about yourself and the things that motivate you and the socialization that you had in the outside world. This is like, I would say, an alien environment because you've never been in this environment before. So you're going to try to fit this environment into what you're familiar with, as opposed to you learning what this unfamiliar environment is and adapting to it. We spend most of our time in this business trying to get it to fit us, where it has nothing to do with us. It's us that have to adjust to it. And that's why most of us still have winning trades, which are random, but we don't have sustainability. And that's the catch-22, at least it was for me. So let's look at this. So I have sellers, buyers are here. Now, this is microstructure. I'm going to just show you a trigger, then I'm going to move on. So I've got buyers. There's the icebergs. Here's liquidity. Now, I call this a liquidity trigger. It's an order flow trigger. It is an advanced concept, and who knows? And as far as I know nothing because I can't predict. All I know is on the way down, I'm looking to see if I find excess. Here's what I see. Stop an iceberg detector. Stops are coming out. Oh, terrible. Oh, my goodness. Stops are coming out. Wait a minute. Watch. This is delta. The bubbles are delta, and this is delta. So we can see them in two places. But as the market's coming down, now a lot of you guys, this is absorption. You get sellers, okay, and they're in control. That's why we're going lower. Sellers, less sellers, but still going down. Sellers, now right here, there starts to be a change. Let me tell you why this might have been along here. Sellers, change. That's why you got this. But this right here, if you took this, you'd be taking it there and you'd be out there. So, and if you did, and it's a location. Now you come down further. Same scenario. Look at here. Now let's look at here. Sellers, less sellers. Right here, I have sell delta. Sellers are still in control. Let's go a little further. Buyers are here. Am I getting above this? No. Where's my trigger? I don't have one. There's sellers here. This is absorption. So I'm now seeing a mix. It's changed. As I'm coming down, this was my last large sell delta. So now it's kind of flattening out. Notice? So this is interesting. So now I'm looking over here, and there's some buyers. There's my sellers. So I'm getting more buy pressure here, less sell pressure. More buy pressure, less sell pressure. More buy pressure. Break high. Break high. Look at the buyers. This is a potential long here, or where were the sellers? Here. So I have this. I have the break above this where the sellers were. That's absorption. I have this, and I have this. If I can buy it here, or if more aggressive, I can buy it there or there. Also, or here. So this is a long. Now, the overnight VPOC is here. This is called mean reversion. Always laugh about it being mean, because outside, where's outside? And I can tell you, mean reversion is a common behavior in the market. And if you can learn mean reversion, I think you have really something that most traders don't understand. Now, like every trade, you're still going to take stops, so that we never escape that. There's no secret sauce or holy grail. What there is we're inside yesterday's range. This is yesterday's high. We had a news event that creates an extreme potentially, and now we find our buyers here. This is the objective, is to come here. Mean reversion. Okay? Is everybody with me so far? If that's an ETH long, up to you. Now, let's get to the RTH open. You guys have questions? How we doing? Remember, if you're in YouTube, I can't see your questions. Apologies. Limited here to one monitor. And I'm actually responding to questions in Discord using a phone. Or at least reading them. So I have a telephone. That sounds archaic. I have a phone, and I have Discord open on my phone. It's the only way I can see questions. So apologies for that. Maybe I'll get lucky. I'm going to be working on this computer, troubleshooting it this weekend. Hopefully it's still alive on Monday. Okay, RTH open. I have a corrupted file in here someplace. And unfortunately, these things don't fix themselves. So it's still in there somewhere. So I'm going to find it. It's a Windows file. Not that you guys care about that. So let's get to RTH open. 8:30. RTH open. What do we know? Here's the RTH open. Where are we opening? Now, this is important. So if we know we had an outlier event, then, and we're above at the RTH open, which is here, we are above the retail price from yesterday's RTH. We are opening out of value. That means the market's out of balance. We do know that we have an extreme, and we do know the overnight volume point of control is above us. And I thought we didn't get to it yet, but it has about a 90% probability. And we do know, I might have given you the wrong naked VPOC here, guys. Sorry. 78, guys, was 78 yesterday's negative volume point of control. Is that right? Yeah, cell phone. This is yesterday's retail price. Sorry about that. And the overnight VPOC is here. That's a fair price. we have our ETH high here, over 98% probability, and to make it juicy, we have a swing high or a previous high that has buy stops above it here. Let me see if I can show you this and try not to make big trouble. So this is we had a small gap here. This is investor RT, just so you know. And this is yesterday, and this is yesterday's retail price, which is, looks like 66. We didn't get there. Now, this high volume from here was a retail price that was too high. We rejected it. Now there's buy stops at 92.75, which we got, who knew? And then the next place would be here. There's buy stops around 69.10. So I had it laid out for myself today, target, potential target. And here's another little tidbit. And it's a little hard to see, but this is all volume profile. This was too high, and we rejected it. I'm not paying that. And then we gapped away. We come back, gap here, and what do? We come back to the retail price from this day, the yellow line, and this is called the micro composite volume point of control. So these yellow ones are the retail price for the previous RTH. This is the highest volume, same as that, except for these days put together, higher time frame. So think of them as an intermediate time frame. If we come up here and this is too high and we reject it, the nature of the market is to come back to it and check it. So this is a target, 79. The stops are there. So that lays out the long scenario for today. And then maybe higher or not, or, after that, it's a thrill. So let's go from there. So coming in today, the idea is north. How you get there? Now you're asking the right question. How do you get there? It's random. So now we have to have structured trades. Let's look. So we already know what happened in the ETH. So the first thing we want to do in the RTH, sorry, I thought I saw a question there in Discord, but not. Guys, if you have questions, post them, but I can't read the chat if it's not related. Okay, try to restrain yourself maybe just for a little while. That would be helpful. RTH open. Now, let me show you longs. So for me, and when I say me, I'm saying is what I suggest always for Trader Lab participants is to align with the dominant side. The idea of this is not all trades are created equal, and edge is not equal. Same trades have different edge under different conditions. Let's look. Trying to open this up, sorry. Again, remember, if I disappear, it's not intentional. It just means my computer decided to go to the beach. This is the RTH open. There it is. I'm opening at yesterday's high. This is the RTH. This is a naked volume point of control. It's a target. This is the ETH volume point of control. This is a target. ETH high probability target and above. Okay, so everything's laid out for longs. Me, no short. So let's look. So this is the opening price. Market runs away. I have a couple ways to get into this. I can look here, or I can wait for a rotation to come out, or in this context, given that I'm out of balance and now out of range, I can do something called VPOC migration. It's a specific trade, and it is designed for a specific condition. And one of the hard thing is when you're developing trader is you think mechanically. It's okay, we all do. But trading is not mechanical. It's something called contextual. The conditions qualify trades. So when I share structured trades, and I've shared 60 PDFs, as you guys know, in the Trader Lab of trades that I just came up with over the years, and I kind of put together some examples of them. They don't exist in a vacuum. The context qualifies the trades. So the same trade in a different condition is not qualified, but developing traders, and we all are, tend to be mechanical. That is not going to work. So you have to differentiate. The context qualifies the trades. And of course, the range qualifies the trades. Range to targets, range to obstacles to get scaled. So it isn't just see this and then plunk, push the button. Does that make sense? So let's look at this. This is a potential long. And why might we take a long? Statistical probability about 98%. Past performance not indicative of future results, and fuel sitting up here. So to me, it's only longs, and depending on my plan, there's a couple things I can do here. This would offer an opportunity for a long. This offers an opportunity for a long. This move here is the same as coming over this, but you need a pullback if you're going to do this. The only way I have, or at least I suggest for developing traders, is mean reversion or VPOC migration trades. Does that make sense? And can I get a response in Discord? Because I don't know what's going on at the moment. Just, okay, thank you. All right, great. Now I'm worrying about you guys falling asleep. All right, thanks, Dan. Okay. So, and by the way, guys, if you're in YouTube, I'm sorry, I cannot see your questions at the moment. Hopefully I'll get some of this resolved, and I'll be able to be back in full force next week. I'm going to be spending the weekend enjoying myself, delving into Windows, and I mean into it. So, in fact, if there's any expert window aficionados out there who are Microsoft specialists, not hobbyists, shoot me a DM. I'd like to communicate with you. Liquidity, break, VPOC migration. We have mid and VWAP trailing, and there's separation. This condition in context is potentially a trend or impulsive move. So we only have longs in this context. This is the first opportunity unless you have another way in. VPOC migration. What do we have? Long VPOC migration. Support is here. Now, there's a couple things you need to know about this structured trade. Like everything, it's only maybe. And the other part of it is that we can revert. So what can happen is, this is too low. By the way, I got to mark this in case we come back to it. It's going to be important. What happens here? Who knows? By the way, when I say who knows, that's a mental thing for me to not get into this, I know what'll happen, and try to predict. I don't know anything, but I am clueless. And it's almost like a mantra. And it's clueless to remind myself I can't predict. My job is to align. My job is to attempt to narrate and read what it says. And that's where Bookmap comes in for me. By the way, Costa Rica, at least where I am, if the monkeys swing on the vine, there's trouble because they grab the internet cable. What do they know? So VPOC migration, you see the sellers, and we're seeing absorption. It's Pac-Man. So if the buyers can consume the sellers, we're going to keep going. At some point, if we run out of buyers and the sellers, it's Pac-Man, remember? We come the other way, we can counter-rotate. The thing then we have to do is look back at the microstructures. Here's a microstructure as an example, just an example. Sellers, buyers, high volume node. Remember how this works. This is the auction. I'm not paying that. Yeah, but it's on sale. If I break high, this is now my support. So I got support here, and then there's more volume here than there is down here. So that's saying too low. Here, I have a little consolidation. This is what it looks like. Too low, too high, retail. Forget it. Too low. Leave the store. Too low, too high, retail, break high. If I don't come under here or under here, because the buyers took over here, I can continue higher. Let's keep going. Sellers are here. Sellers are here. What's going on, Tom? Buyers are there. Breakdown. More sellers here. Absorption there. Don't know until hindsight, so you got to give everybody a break. Nobody knows. High volume is here. Too high. Now, when I say too high, it's in microstructure. So when I get too high, wrong one. Actually, I cannot put that. I can't draw these white lines I normally do. So you're going to need to look at this. I'm trying to keep all the trouble out of this computer until I can sort things out. So some of the things I do drawing the boxes, I'm not going to take a chance. It's more important that I stream for you guys. So right here is support. Break low. When we break away from where the buyers are, this becomes resistance. The high volume, and this is like a volume point of control. It's the same as this. This is for the developing daily time frame. When I go down in time frame, as you think of it, and I don't think of time, it's behavior. So there's no clock. This is not based on anything specific to a clock. It's this. Where do the buyers and sellers interact, and then one side takes control? That's what's important. I'm not waiting with a stopwatch to say I got to wait for the bar or whatever, or the candle. Sellers, buyers, break. Sellers are under the buyers. They are now in control in the short time frame. Watch. VPOC migration, too low. New retail price. I'm going to mark it. So what's happening here is the volume is moving higher, the higher volume in the developing daily time frame. Going down in time frame, this is too high right there, this node. It's the same as that, except it's micro. I hope that makes sense. My cell phone just went, what are you doing? Hold on. Okay. So support, resistance, and how, if I want to get long, and this is the new retail price. We have a couple trades in Trader Lab. And what else do I know? The stops here. So I always have to look left, see where the stops are. Why would I care about that? Because the market goes up to go down, and it goes down to go up. Why does it do that? Because of us. Why? Because retail traders all do the same things. They micromanage their trades. Why? They're risk adverse. So am I. But what does that have to do with my fear of loss and what's best for me in the business? What's best for me in the business is to accept my fear, but not base what I do on my fear, but base it on statistical probabilities. I might be overall more profitable keeping my stop far away, even though I'll give a lot of MFE back, if I have a large sample of random behavior, because this is all random in these short time frames. But overall, if I have more edge, even though I get taken out of individual trades and I have emotional response to that, what do you think's the better way to go? Isn't it with the statistics? So get that statistics give you confidence to give MFE back if overall it gives you more profitability. I mean, it's logical, right? So VPOC migration, what does it say? Too low. So now I got VWAP and I got mid. So in the trader, and let's go a little further. What else do I have? I have an outside edge out here. What's an outside edge? This is where we accelerated and we moved away. There's the buyers. The possibility always is to come back. VPOC migration. So now this is an important level. This 85, I hope it's accurate. And statistically, remember, ETH high is a target. If you took this long, you'd be going here for a scale. And the probability is about 90% plus to take either the ETH high or low. Considering we know it was a news event, you see how you put these things together? That created the news event, created the ETH low, and it was excessive, and we had a V retracement out of there. The buyers are there. So wouldn't you think, let's think a little bit. Wouldn't you think that the probability of that 90% plus is the ETH high? Is that right? Maybe. And if that's the case, yes, Greenhorn, it did. So let's go further. So this is your target for a scale, and then you're looking for continuation longs. Now, there's another thing that we have to talk about, and one of the traders in Trader Lab just reminded me of this, and I was looking at this morning. The market often comes back. Where's our opening swing low? Is there an opening swing? No, this is an opening drive. But what else do we know? Let's think as we do from a number of different levels. We did not get a counter rotation, we just drove away. If you drive, the market may never come back because we're going into a trend configuration. We're rejecting yesterday's value, perception of value, and we're outside of the range. Wonderful. But if we get a counter rotation, the longs in this leg can be abused. Have you ever been abused trading? Well, what it is write this down. The market goes up to go down, and the market goes down to go up. Why does it do this? Why does it rotate? Well, the longs in here are trailing sell stops, so we have built-in sellers. And then if we go down, we can trap sellers and at the same time take out these longs. If I take the stops out under this low, opening swing low, and I don't get continuation selling below, all it is, and I call these stop picks. You ever get stopped out and get picked off and think they're out to get you? Well, why might that happen? If I run out of buyers, which we don't know if or where, so not our responsibility, and we get taken out and we see everybody else getting thrown under the bus, we have to be looking outside to get long again if we think we're going higher. Now, why might we think that? Here's why. Up here, there's stops up in here. And what else do we know? This level here was too high previously, this whole area. So this is my target after the ETH high. Now, the fact we come and take the opening swing low out, I'm totally clueless. So don't think I know. I don't try to know, because here's why. I know I can't know. So my energy doesn't go in there. It goes on narration and understanding what change might look like. Here's where change starts happening. And the other part of this is location, target, and this. Let me try to get back to Investor RT for a moment. I hope this is still in here. 80, this, I think. Yeah, this area, 84, 85, this is an important level, and so is this. This was my retail price from this consolidation. Now, this is different time frames integrated into each other. And my stops, remember, were 92.75. This is what I consider low-hanging fruit. Because the shorts in here, you're going to have buy stops above here. What does the market do? The market goes down to go up. And then the market goes up to go down. That's kind of how it works. Write that down. What does the market do? Market goes up to go down. Market goes down to go up. And this is a dividing line right now. So let me get back here. Hope you're getting something out of this, guys. And if you're visiting in YouTube, thanks for visiting. Sorry I can't see your questions today because of technical issues, but use the link in the bottom of YouTube if you want to visit TraderLab. There's no cost. And I really have to tell you, Bookmap invests in traders with education. It's all available at no cost. Stocks, options, crypto, order flow with a high tier tool like Bookmap. There's so much education. Other streamers, who bring their expertise and another way to look at the market. Of course, TraderLab is available to you, and it's a full-time community. And it's about the business. Wow, nice. So this is support. This is resistance. Never know, won't know. Sellers take control here. This micro volume here becomes your resistance. There's my sellers. Now let's look at where my resistance is here. Buyers are here. I get below the buyers. My sellers are here. Sellers are here. You see the buyers. They are being absorbed. Break low. Where's my resistance? It's there, 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 here. This is like a volume point of control in a microstructure. Same as that. Higher time frame there. Micro time frame here. Resistance. And to go higher, it's got to do this. Stay above here. Or if it counter rotates, hold this area down here. So we have a potential long here, a potential long out here, and target would be here. And we got our ETH high, and we still have targets up above. So let's just see what it does. Comes to the mid. This sets up a reversion long. Let's go look a little bit further. Now, the thing to understand is, what do we know? We know there's stops, and we could get buyers at the VWAP, and we know there's stops at the mid. If you're looking for a long, and this is subject to, and what else do we have? Overnight volume point of control, which was what? Too low. And this, too low, I believe. Yeah, I'm questioning my levels because I've had a lot of problems here, but I'm going to suspect that 79 is a qualified level, a naked volume point of control. Hold on. And then we have yesterday's high and the opening swing low and VHVN. So let's see what it does. So this sets up a mean reversion long. So this is a long. Let's look at it. Now, here's where you have to really follow what's going on. This is a auction right here. So buyers are here, and there's green delta. So the idea is if I see the delta, I want to see, can I overwhelm the sellers? Well, if I get the buyers and it doesn't go anywhere, that means absorption. I come down. My buyers are here, under here, and my sellers are up here. So if I'm looking here, because it's a location, I already know that retail traders keep their stops under the mid, and they're mechanical. They buy the mid. Have you ever just bought the mid mechanically? I used to. When I mean used to, don't forget, I started trading in 1980. So I have a lot of time to have done things used to. Buyers are here. Sellers are here. Sellers are here. Sellers are here. Buyers are there. So right here, I have my consolidation. There's my high volume. Okay. Break low. Stops. No clue. This would be where you're looking for a potential long or out here. And the idea of this trade's to come here. If we get a buy trigger. This is a long. Now, I have to talk to you about this long. It is not qualified. Here's what's important to understand. The auction does not care about what we need to qualify for a trade. Okay? Yeah, Ragnar, I can't share anything at the moment. I'm having technical issues here, and I don't share my cloud notes. But there's other traders and TraderLab will help you out with that. So somebody else, I'm sure, can do that. We have some traders who do share their cloud files. I'm not able to share mine, and I certainly can't share it from Costa Rica. I'm not on a server. These guys have servers, and I'm on a laptop. So that's a little problematic. So sorry about that, but there are other resources that have more stable configurations than I do at the moment. I'm going to be down here for a few months unless I have to jump on a plane and go to Miami, pick up another computer. I almost booked a reservation to Chicago, but it's like 9 degrees there, and I have a certain what they call resistance to that concept. This is a mean reversion trade, not qualified. Well, it's not qualified because you have to scale at the mean, and by the time you enter, there's like 2 points. So for me, I'm observing the behavior. I cannot take this trade, and if it goes on without me, I just have to accept it. It's not my trade. But this is reversion behavior. So now, if this thing keeps going, say Laguerre, thanks for playing. You get a coupon to the buffet, Tom. And the other part is, if it comes further outside, I have low volume out here. So I can be looking out in here. And I have support down here. But what else do I have? I have stops, and I have not tested the opening swing low. And if I fall back in the range, it could get a little ugly. Let's see what happens. Here, I checked yesterday's high. Now, support is here. This sets up a long. Let me show it to you. Now, remember the trade. The things I recommend, and when I say the ideas I share in Trader Lab are just based on my experience. Now, it's 47 years. I'm not saying it's the only way to do this. But when you're a developing trader, you have to learn pieces, and you have to become competent in a sequential process. If you actually want to get educated. If you want to play a video game, then you don't need education, and you just, do your thing and have a good time. But the idea of Trader Lab is to help you understand what this says. Here's what this trade is right here. This is here's our liquidity. That's the first piece. Here's our delta. So we have selling. There's like 120 stops coming out. Those are market orders. That shows up as delta. And we have VPOC migration down. That is suggesting this is too high. This is the retail price. So right here, I have yesterday's high. So I know if I can stay outside of yesterday's range, I can be a buyer, and this is where I need to scale because this is the retail price. So this is like too low retail resistance and then out the top, maybe. Okay, so and the key to this is yesterday's high. So if I come down and test yesterday's high, I don't get in range, I can still get long. So right here is absorption, no clue. Let's look at the trigger. I have a location, no precision. Sellers are here. Liquidity, this is an important piece of it. This is how Orderflow can help you. Buyers, absorption, no clue. The market goes lower. Now let's tear this apart a little bit. Notice what's going on here. Selling, big selling, anticipating it going to zero. But this is excess. Don't know it until here. Now it becomes a suspect. Like, what's going to happen here? So sellers are there. Absorption is here. This little box is an auction. Inside of this little chop are the participants. In here is a micro high volume. It's the same as that, except we're going down in time frame without time being the element, okay? So and as far as I know, it's just going to do this and keep going. That's what I know. And that's about all I know. So break high. Now there's a change. Notice here, less sellers. Don't know. And now I'm seeing my buyers. I'm seeing my buyers. I'm now above the sellers here. Break high. Buyers take control away from these sellers. And I had my buyers here, under here, the absorption. So now I want to see it come back and check. and then I'm looking for a long. Now, the problem I have is I got a scale in front of this. So let's see if I can get it. Support is there. And if I get long, I have to use a shoehorn to get here. And then my next obstacle is here. And you're going to ask me, what's the difference between that one, the first one, and this one? The difference is I got the stops out of the mid, and I got the stops out of the mid. And if I come back, I can come back to VWAP and I can come back to VPOC. If this fits your plan, you could get long here and you got a scale there. And then you're looking for continuation. But instead, what happens? This is my support there. If I can't clear this, then this, which was my support, if I break it, and there's the test, and if I break, the trade's over. If you didn't get risk neutral, you'd have a stop. If you were able to get risk neutral because it qualified, you'd scratch. That's just trading, you know. Now we come down. Now, right here, remember, we didn't get the opening swing low, which was like right here. So we have to know that. Now we're back inside the range. Now, whether you take this or not is plan specific. You would know that there are stops under the opening swing low. So that's subject to plan. I'm just showing you the trades. Whether you take them or not is, remember, what did I say at the top of the stream? Context, condition. Now this sets up the long that really matters. This is a sweep. In Trader Lab, I often talk about this because right now, where's my resistance? Support becomes resistance. This is an order flow trigger. Once I get below it, it's resistance. Now I'm getting my sweeps and I took out the opening swing low. There's confluence. I'm checking the range. Yesterday's range, I'm still out of balance. I'm just checking the range, but I'm out of value. Let's remember what it means. Being out of value, which is this, means that the market is still out of balance, and what we're doing is we're taking out the early longs, including all of us. Unless, you know, and you could be short if that's part of your plan, but for developing traders, I always suggest just get aligned, you know, get aligned. Stay with the dominant side. Higher time frame is up, intermediate time frame is up. Okay? So now we're getting the sweeps. So this is good. We got the stops out and the teeth chatter. Why? Who knows? Now I have confluence. And what would my trade would be longs to here, and there's another piece. Now, there is a report, big one coming out at 9 a Central Time, and there's also statistical probabilities to take out the first hour's high or low. And once we get the stops, right here, if I don't get additional selling underneath, then I'm looking for a long. It's the same as what this was. It's just from outside. And the further outside I get, the better I like it, because now I have more range to get risk neutral, and then I'm going to look for continuation long. So this is okay. It just is what it is. This is trading. Let's watch. Let's look at the trigger. Let me open this up. How you guys doing in YouTube? Please give a thumb up. Accept my apologies. I cannot see YouTube. I only have this one laptop monitor, and I'm looking at the Discord posts on a cell phone. That shows you how exciting things are in Costa Rica today. And I am working to resolve this. This here, there's my selling, there's my sweep. So I'm on alert. Also, one second. I have a variable high volume node, which was a retail price from earlier. It's too low. It's an area. I don't know anything else. It's an area. I see my buyers. Now let's look at where my buyers are. They're here, and my sellers were here. Absorption, sweep. Now I'm looking. I got my buyers, Where's my sellers? Where do they go? I got a seller here. Okay, now what? So I have resistance up here because I dropped from here. Microstructure, you can see the high volume. So I don't know, except I have sweep, maybe excess. So when I break up, now this becomes support, and it's in alignment with this high volume here, which was, remember the shopping experience, too low. Auction market theory is just shopping. If you know how to shop, you already know how to trade. You just don't know how to integrate it into different time frame. Prices don't change in the store. Here, prices change all the time, but the behavior's the same. If you go to the store and they're having a sale and you perceive that this is a super deal for your tuna, you throw 5 in the cart, right? It's on sale. Well, if you perceive based on the auction that the highest volume so far for the day is here, is this a sale? Well, it was too low previously. And if we're only picking off the stops of the early longs, then the possibility is what? North. So let's watch. Sell sweep. So I have a sweep, says potentially counter rotation. I get another sweep. Teeth chatter. Location. Stops taken out. Thanks for playing. They also get a coupon to the buffet. Sweep. Support. Watch. High volume. So what I know in the microstructure, this might, because the sellers were here, maybe too low, break high. Where have you seen an up rotation? Watch, see the difference? Where's my up rotation? Do you see one here? Where's that up rotation? I got a down rotation. Here's an up rotation. Where's my resistance? Isn't it right there? Because the sellers dropped it. Now I'm in micro, but look what I can see by understanding market mechanics. That's too high. But what's too low? Wasn't it here? Because the buyers took control right in here. Variable high volume. No. So now I'm still clueless, of course. But watch. So this is a location. Did the behavior change? Well, this is the largest up rotation compared to, other than this, which was a potential long, not qualified, I believe. Or no, a long with a scale if you took it. Now, support is here. Resistance is here, right? Resistance, resistance, support. This is your battle. Sweep, support. Resistance is here and here. You can see it. Sellers are here. Break low. So the sellers are here. The buyers are there. So sellers are here, buyers are here, buyers are there because we held this little support. Our sellers are here. Resistance, resistance. You can see what you got, right? Support, resistance, high volume now is there. Break high. You can be buying this, 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 and you're going here. First scale. It's the same as this from a different location. And depending on your skill set, you'd be getting long here because of the sweep and the buyers are here. You can see the buyers. Scale. Then you have this as resistance. See where the support is. Look where it comes back. So the idea of using a volume profile, it's not an indicator. It's showing you participant behavior. Now, where's the resistance, you ask? See it? Why does the market go to these levels? Because the auction is shopping. It's very simple. Now, here's what's not simple. Randomness. The thing about us as traders is that we're looking for certainty in an environment where it doesn't exist. So if you can accept you're in an environment that's 100% random, 100% of the time, you're off the hook about being right as far as what the market will do. And I know psychologically we want to be right. We need to be right. We want that. It's good for the self-esteem, the valuation, and all those good things. But that you can't get that here. What you can get here is knowing when you have an edge and having a plan laid out so you know everything you will do, everything, down to the last tick. What will you do? Because you cannot know what the market will do. So it's no different than the casinos. They know what they will do. They play the games exactly the same way, but they don't control what happens after the cards leave the deck. They don't control the cards coming out of the deck or how gamblers play the cards. So what control do they have? Only how they play the game. And they also know they're going to pay the gamblers. You've got to put yourself in the same mental state. It's not easy. I'm not saying this is easy. I'm saying is you cannot try to fit trading and wrap it around your psychology and your primal wiring, looking for certainty and avoiding risk and all the things we like and need. Doesn't work here. Casinos can't avoid the risk. And the reason they get paid is because it's no different than any business. Every business has risk, overhead, cost of production. Yet when we come to this business, somehow we think we can suspend those rules. You see? And we're charged emotionally and chemically by the stimulus and the fear and the FOMO and the rest of it. And we bring that emotional state here. But that's not the business, you say. So it's a really kind of a battle to separate how you feel from what you do. And I think anybody who comes to Trader Lab can learn how to trade if they do the work and only take trades that have statistical validity and leave the rest, because this is a business of edge. Casinos don't make the games up. They don't change the game because they paid a gambler. If they write a check out for $100,000 to somebody, they don't make up a new game, but we do, or we want to make it back. How does that work? If a casino did that, what we do naturally, would they still be in business? I'm going to suggest you already know the answer. Well, then how can we expect a different outcome if we don't follow the business model that we're actually in, which is gaming? You can learn this in Trader Lab, and you can learn how to operate in this environment. And I'm going to suggest it's going to take more than you imagine, not because you can't learn how to trade. That's not the problem. I think anybody who does the work can learn how to trade. But if you have FOMO, you won't take the time to learn how to trade. Your dopamine fix is going to drive you to FOMO. Anyway, long, wherever it was, down below, to here, to scale. And now look at the test. So if you got long here, now our support is here, right there. This is another long. If you want to take it, trend is up outside of yesterday's range. This is still mean reversion. Remember, mean. Watch. Out here. If I get through here, which is my retail price, I can come back to here. If I clear here, I can go up to my targets, which are up above, which is up here. Resistance is here. You see where it stops? So support now is here. Support is here. Support is there. This is the retail price. This is resistance. I'm not paying that thing shopping. If this now is too low and I clear this, this can become support. Shopping. Continuation. Going where? To the stops. Primary target. There's more. You're going to say, really? Yeah. Watch. At 9, there's the report at 9 a.m. Up to you. Me, no problem staying in this one. Now, watch. First hour's high. At 9:30 Central Time, there's something called the IB. Initial balance is the first hour high low. It's from market profilage, as I like to call it. Now, there's a couple ways you can work this. First of all, we get VPOC migration. What is that? Same thing here. New retail price. Going to label it because it's important. Now, there's a couple ways to trade an uptrend. And currently, I would say, at the moment here, the trend is up. So there's no shorts unless you're a counter trend trader and you have an edge. For developing traders, not so much. This is called a low volume area. What the market tends to do is if we run quickly like we did here, so the market just goes, I'm out of here. It's not auctioned. So the nature of the market is to come back in all time frames, whether it's a high time frame or a microstructure, and check these areas. In other words, I didn't have time. Well, okay. Now what? Let's come back, and there's going to be stops under these swings too. So if I know that, then I already know where my next trades are. Not where exactly, but what the behavior is. And if the trend is up, it's only long continuation trades. I have a statistic that will be set at 9:30 for whatever the first hour's high, which is over 90% probability to take out first hour's high or low. Me with the trend up, north only, longs only, going for this, and targets above. What's above? This. So this is my next target. And I have this. So I got to be conscious versus unconscious. So I get a sweep here and I bump into liquidity. This suggests a counter rotation. This one suggests an up rotation. This one suggests a down rotation. So what do? Well, let's see. VPOC migration. So this becomes support right here, right there. This is the new retail price. And I'm looking to get long continuation. I'm going to show you something that most retail traders don't even think about. First of all, write this down. Look left. If you're not looking left, you're giving yourself a big disadvantage. Always think like a retail trader. Just don't act like one. What's this? First of all, sellers were here. Sweep is here. This is support. What else is this? Sellers were here. Buyers are there. Buyers are in control. This is support. This little high volume out here, this is support. But here's what's important. Well, let's look very closely together. I want you to see this because this is one of the most overlooked things because we're too busy. What's the nature of retail trader behavior? Risk aversion. I don't want to give it back, right? Tight stops. So where are the stops going to be? Well, there, there. Okay, but what else? Let's look a little further. What's this? What is that? Anybody? Isn't that a double bottom? So if we have longs in here, there's going to be stops here. I mean, everybody puts their stops at different locations, but we know there was absorption here in buyers, and we know there's absorption in buyers here. So buyers, but I got a double bottom now. What that does for me is it suggests the following. Sell stops, sell stops. If I rotate down and come outside somewhere and take the stops, I'm going to be looking for a reversion, a long trade, because I have a statistic with an over 90% probability. And I got this thing sitting over here too. So let's look. Let's watch the behavior. VPOC migration. Pull outside. Get the stops under here, and I have stops here and here. So I'm looking outside, and this is called mean reversion because it's an outside edge, not auctioned. And it's from this location where we accelerated. Not auction. Nature is to come down somewhere, part of the thrill. I had a sweep here, but this was the key element for me. And if I get in here outside, this is mean reversion. I'm outside of range. I'm outside of value. I'm over the ETH high, over where the stops were. As far as I'm concerned, I'm going north. So this is my target. This is the mean. So it's outside it. And a high probability at 9:30. So I'm already anticipating that stat. This sets up your long. Absorption. Buyers. This is a long. Scale here. And then you're managing your trade. You're going for this at 9:30, which is right here, 9:30. So you have the long into 9:30, mean reversion out the top, and then north. Hit this. Need to clear it. This is a sell trigger. Now, sell trigger, what do you do with this? Well, we know this liquidity is here, and we know we have our buyers, and now look at the selling delta, and we break low. Now, this is optional. Only what I'm saying is your trade management plan determines what you do with this. We know the buyers were here, and we know this is support, this little high volume. It was too low. Too high, too low, retail. Oh, it's on sale, 4 in the cart. Back to developing daily fair price. So micro fair price, too low, fair price. And then statistic, and then north. This is where trade management comes in. So where do you have your stop? Well, subject to your plan, this is your scale, your stop stays here. And you'd either scratch the trade or get a few burgers if it breaks. Watch. This sets up, now we come down, this is the same trade, that's still reversion trading. At this point, we wouldn't know that it's going to go break lower. So this trade to here is the same as this. We come into liquidity, we instead of just coming and taking these guys out, we get them too. Thanks, Tom. You get a coupon too. Down, absorption, liquidity. I'm back outside, low volume, and it's still mean reversion. So for me, it's still longs. No way to know anything else. Take a long, get here. This is your scale. Looking for it to take out the high of the day. This is where you got to be scaling. And if I always scale a couple ticks ahead, and you would be scaled. Now, the thing here is you get the sweep and you're looking for it to come back and clear. You get VPOC migration. We need to come this way. In other words, too low, back here, up. Instead, this is the new retail price resistance. Break low. Trade over. Trouble in River City. No clue. Watch. Trouble. What's going on? So now we have the IBF from above. We're still out of yesterday's range, so I have no shorts. That's counter trend, so I have nothing to do, and I don't take these trades. Because to me, the edge now is gone for me at this point. I have longs in the market. I have nothing to do. So now the stops are under here. And we have now, when I take this out, we have something called the neutral day. Neutral day means both sides are active. So we found excess on the upside, and we can either keep going south. I'm inside yesterday's range. Value area is now the next thing I have to be thinking about. This right here. And I believe 66, but I don't know. Guys, is 66 a good number? I'm asking because with all the trouble I've had, I don't know if that is a stale number. 68, 66. Oh, thanks, everybody. Okay, 66. This is a target. This is a retail price from a previous day, I think yesterday, and value area high. This was what? The retail price. This is the same as that, except this is when the market closes and the highest retail price is, RTH close. This is retail and right near value area high. So if I'm in range, I got to be careful, but I know that the higher time frame trend is up. If I hold this retail price from yesterday, highest volume, and I test this, I can take a long here. And where might I go? There, mean reversion. Mean, but reversion. Sweep. Microstructure. Now, this is the area. So you got to be very careful. And by the way, if this doesn't fit, you don't take it. The idea of this would be to come from here to there and then come across. Let's watch this. Whoa. This is still not broke. Now, if you were able to take this, this is your scale, and you get taken out. This is the same trade, and now I'm current. So for me, it's still longs, no shorts for me, because I'm, at least for Trader Lab, I always say pick a side. So there's a sweep. This is the target, not a recommendation. I think this all makes sense, right? To there. If you took this, because it's against yesterday's high, you might not get scaled. If you didn't, you take a stop. Just the way it is. The support is there. And then the support's here. So you got this and this. This could be a long. But the thing is, the low is here at the time, the IB low. It's a high-risk trade in my book. Doesn't mean you can't take it. It's just a trade. Support is all this is support. Take it out, sets up a long. It's the same. These are the same. You see the similarity? It's just to there. If you took this, no bueno. Here is support, break low. Once this comes down, then the longs in this leg are vulnerable, right? They get taken out. It's still a long because of this. So for me, it's a long, not a recommendation. Have no idea. And this is where you're trying to go. It's the same trade from a different location. It's called mean reversion. And the reason I would take it is we are in two-sided trade and both sides are active. So the job for me is to wait for locations, put my risk on, attempt to get risk neutral. This is the long entry here, get my risk off, and then you're trying to go here. And either it does or it doesn't, and that's it. It's not more complicated than that because it's random. It's just knowing where your locations might show up and stalking them. What I do is I wait for the locations. Now, should I be taking shorts now? Or should I take long continuation trades? I have to tell you, I can't give you an answer for what you should do. I know what I would do. And I'm going to take stops if I'm offsides. It doesn't matter to me. Emotionally, I don't like it. But the trade, because here's what I'm going to go back to. Now, there's another factor in here. It's Friday. Market's been long. It's long to the gills. So when we came down and took everybody out, and went neutral, which means we took out the first hour's high, then the first hour's low. And I don't get selling after that. What might have happened? Maybe being the key piece. And here's the thing. This and this, remember, I'm putting pieces together. It's like being a detective. Well, this was retail yesterday. Maybe it's too low. I tested it. And value area, where 70% of the volume is, I'm still outside of value. What does that mean? It might be too low. What do I want to do about that? I want to get long. Why, Tom? Because this might be too low. What did I do? Took out the longs. Too bad. Sorry, Charlie. He did get a ticket to the buffet. Now it's a long to here, and it's not a recommendation. This is called structured trading. Now remember, the market's random. We all take stops. If I have a day where I don't take stops, I get actually concerned about it because that means maybe there's a bunch coming, you know. No, seriously, I don't. I'm just trading statistical probabilities, and I actually expect to take stops. It's not being negative. It's because I understand in business we pay bills, You know, the thing to understand in this business, we can pay a lot, get a lot of bills. So we have to be disciplined to only operate when we have a statistical edge. That's the same thing as saying is I'm not going to sell a product and have a guaranteed loss. I'm only going to sell or create a product where I have an opportunity for profitability. That's what statistical edge is. So for me, I have a statistical edge here to go there. And if I go there, I can follow it up to get these guys out. Because let's take the reverse thinking. If I get buyers, where are my sellers? There, there, and there. So buy stops become buyers. So I can get new longs, and I get buy stops they're in the squeezed area. Where are my stops? Above the swings. So you can operate and always think from the other side. You really need, in my opinion, not to be just thinking here, but think where are the buyers? They're sitting there, they're sitting there, they're sitting at the swings. So if I get long, I've already got buyers in the market, the shorts. Does that make sense? This is what needs to be in your trade plan. You need to have bullet points. And I don't know if this, let me see if this is, now I don't use this, but the fact is, I always say in a trade plan, you can put parameters in of what has to happen. So if you know you're coming into mean reversion, you could have a checklist in here. And you make them up, so you customize them to the trades you have, So, and you can score them, the weighting, what's most important? Well, what's the context? Up, what's this? Boom, 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 boom. If you're not using this, or you don't have a trade plan that's like in a binder, then you're missing out. There's so many tools in Bookmap. I mean, not only that, but the replay. You can go back and replay this. I mean, for years and years, and I still do it today. If there's something that doesn't register, I'm going to go back and look at it. I can do a replay and slow Bookmap down to like micro, so I can see the nuance. Or if I want to do speed reading, and what I'm doing is reading or translating a language, I don't use indicators. I'm not an indicator person. Been there, done that, built systems, threw it all away. Very hard to do, by the way, because everything works randomly. Don't forget that. So everything you do works, right? So you spend your life trying to make it better. I get it. And I coined a phrase for myself called Trader Groundhog Day. Work hard, wake up in the same place, because of the random winnings. You say, I just got to make it better. Well, maybe it's defective, but you don't know it because you think it's just make it better. Your process may be defective, and everybody has winning trades. You realize if you had a random buy-sell generator, you'd still have winning trades. We had a magic 8-ball on the 8 desk. It did on the trade desk. It did as good as anybody, who was just winging it. Just something to keep in mind. Does that sound like you, by the way? If so, visit the Trader Lab. There's no cost for it. But it's only if you're serious. It's really, I know you guys have probably been in a lot of chat rooms and it's like romper room. This is not what it is, It's a community of traders. It's not about me. It's really about you. I can only lend what I've done, and I've trained traders, coached them, been on a desk and the rest of it, managed funds, go on and on and on. I've worked with hedge fund managers and a lot of different things. That doesn't mean I don't take losing trades, and it doesn't mean that I don't have losing days. Would you really think that it's any different? Realistically, it's not. We're all the same. The difference is learning the reality of the business, navigating that reality, and solving for the reality. Not trying to make it something different. Actually embrace what it is, and then figure out a way to live in the environment. It is like being on Mars or some alien environment. That's the truth about it. This is like you just parachuted, if you could, into Mars, and you're going to try to apply what works on Earth in an alien environment. You can't change this environment to be Earth. You've got to change yourself to operate in an alien environment. Does that make sense? If you're in YouTube, please give a like. By the way, you guys, if you're visiting in YouTube, this stream is available to you as well as the library of webinars that are in the Trader Lab document section. And Ned, thanks for curating that for Trader Lab community. There's streams, real-time streams in there up to 4.5 hours long. I don't typically get to do that anymore. We have other streamers, and Bookmap is committed to trader education, and it's all available at no cost. One thing I have to tell you about Bookmap, and the reason I agreed to do this, is Bookmap puts traders first. If you succeed, they succeed. Bookmap is investing in your success. I personally don't know any other company that invests in traders, whether you're a subscriber to Bookmap or not. Now, the thing is, of course, if you become successful and you progress, then maybe you will use a high-tier tool like Bookmap to increase your edge. That's only logical. But you have to develop an understanding of how to trade, how to separate your fantasy from what the reality of the business is, and Bookmap is making that investment in you. I think it's pretty amazing, actually, and that's one of the reasons I created Trader Lab, because Bookmap is unique. Not only the product, but the company. And I have to say that because I just don't know any other company who does that they're actually putting the traders before themselves, because it creates a win-win. So think about it. I don't know any other company that does it. You can use the link in the bottom of YouTube if you're inclined. Use the link, visit Trader Lab. That could be your first stop. Say hi. It's a great community, but it is serious. I'm sure you guys have been in paid, tuition, either market losses or to gurus or, the holy grail of trading, whatever it is. It's all out there in internet influencer world. And by now you know better, right? You just got to roll your sleeves up, and you have to try to keep this simple. Complexity is the obstacle. Simplicity, you got to strip everything away so it becomes very process oriented, and you have to find where your edge is, or statistical probabilities that favor you. And you are going to take losing trades. You're going to have losing days. You're going to make errors because you're human, and that's all of us. But if you can make progress and learn what the business is, and then develop a process that aligns with your psychology, it gives you a better opportunity for sustainability. And that's really what Trader Lab is about, and the Bookmap server. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, algorithmic behavior, a lot of specialty processes you can learn that can potentially give you a statistical edge. That's what it's all about. If that interests you, use the link in the bottom of YouTube, visit Trader Lab, say hi, take advantage of all the resources that Bookmap offers. It is Bookmap's a unique company. So that's why I agreed to do this and create the Trader Lab. And also the Trader Lab participants, I want to thank all you guys for being patient with the technical problems from Costa Rica. I am sort of a digital nomad, a Bedouin without a camel. And I was in Mexico a couple of weeks ago for a month. Here, I'm a couple of months here, assuming technology can stabilize. I'm going to be working on this over the weekend. Again, if there's any Microsoft real deal, not just somebody who has a screwdriver, but somebody who's had Microsoft trading, I do have a corrupted file in Windows 11 somewhere, which I've found. And I'm going to be working on it, and with my own little screwdriver, but a little consultation wouldn't hurt. Please shoot me a DM in Discord. We can talk. And if you're in YouTube, please give a like. I appreciate your patience, and I look forward to seeing you guys next week. Don't forget to like on the way out. Thanks for visiting Trader Lab. Be sure to review this stream over the weekend, and there's a whole library of webinars, plus tons of these streams up on YouTube if you're inclined. See you guys next week, hopefully, and hopefully I'll have some things working better. See you then. And thank you, Trader Lab, for your patience, and also all of you in YouTube. See you soon.